Kevin, M&A has been impacted by a confluence of events, and we all know about them. It's the macro, it's the interest rate, it's lack of earnings visibility, it's geopolitical tensions. M&A is down, of course, but Q2, it showed some resiliency.
Look, we are seeing some green shoots. It's been a difficult period. If we had had this conference 6 months ago, I would tell you that the M&A market was very, very quiet. I will say that the second quarter has been up over the first quarter of this year. It's still down relative to 2022, but I think many of us, particularly those of us in the industry, have to rebalance the way we think about M&A volumes. 2020, 2021 were extraordinary years by any measure. We always used to look to 2007 to be the high watermark. Those 2 years well outpaced 2007. And so what we're seeing is a more normalization to levels that we would typically see in a 2018, 2019 time period. So I would like to see that. I would like to say that there is a degree of stability and hopefully some green shoots too, Atish, because when you think about the news that came out today, if that news had come out, and Vic can probably mention this, but if this news had come out in terms of the inflation numbers, again, 6 months ago, the market probably would have panicked. Instead, the market actually shrugs its shoulders and moves on. And so when you're an M&A practitioner, which by the way is supporting all of the corporate folks that you see in this room, it starts to give you a degree of confidence when you think about moving forward with a transaction, insofar as you have a relatively stable financing environment, a positive equity market story, and it looks like we might actually dodge a recession. And so that enables someone who's in a CEO position to say, yes, I'm actually going to move forward with a potential transaction.
Kevin, just following up on that, we think it has stabilized. You see some green shoots, but is it very sector focused? Are there sectors that you see a spate of M&A activity or you expect one, or is it across the board?
I would say it's fairly balanced. I mean, the place where you've seen the biggest change or the biggest delta in M&A volumes has actually been in technology. And again, that's a factor of having technology be an incredibly active M&A sector. But with particularly the FTC and the DOJ focus on technology, you can see there's a minor court case that's happening in DC at the moment. That people are actually a little bit more reticent around doing deals in the tech sector. That said, there's a lot of companies that are completely outside of tech, industrial, consumer, retail, who need to do acquisitions in technology in order to position themselves to be successful in the future.
And then in terms of deal size, Kevin, how do you see more activities in, let's say, larger deals, 5 billion plus, or do you see, billion plus, that's where the most of the activity would be?
The sweet spot has, believe it or not, kind of been in the middle, that $1 to $10 billion range. Those deals are getting done at a level that's very consistent to last year. Where you see less activity is on the smaller end, which would be a lot of sponsor-led deals, where I think a lot of the private equity funds are waiting for a better moment in the market to actually move forward with the assets that they're selling. And then those larger transactions that are going to get the attention in Washington, D.C., those are tougher to move forward with. Because if you're a corporate and you decide a very important strategic move is to merge with someone in your industry and it's going to get reviewed in Washington, it's not necessarily that you might not get the transaction through because the law is on your side, but you might actually have to litigate, and the time frame to close that deal could be 18, 24 months. And that's a lot of time and uncertainty for someone in a corporate C-suite to be out with a merger that hasn't closed. And so that's why I think some of that activity has diminished over the last few months.